Welcome to our final quarterly update for 2019. Fall has finally arrived here in Middle Tennessee with cooler temperatures, which are so refreshing. We've been following three themes this year. First, a slowdown in growth around the world. Second, interest rates nearing the neutral level, where rates are neither fueling growth nor restricting growth. And third, balancing risk and reward. Said another way, participating in continued growth in our financial markets and at the same time being mindful of the potential of risk of recession out on the horizon. Since our last update, the Fed has indeed moved to lower interest rates. This in their ongoing effort to find that neutral level we've talked about this year. We continue to see reports that point to lower economic growth. Recent data indicates the U.S. is not immune to global weakening in manufacturing. U.S. factory activity contracted for 2 consecutive months, meaning factories are producing less, and it now sits at the lowest level in over a decade. Consumers globally remain resilient. This is important, especially here in the U.S., where roughly 2/3 of our economy is consumer-driven. However, I think it's worth noting that consumer spending declined in September, so we'll want to keep watch on this important metric. There continues to be no shortage of global news dominating the headlines, of course. Still, with the uncertainty that remains around trade, Brexit, geopolitical events, our financial markets continue to perform well. We continue our focus on balancing risk and reward and have taken steps this calendar year to reduce impact volatility has on our portfolio. This quarter will take another step in that direction. We recently completed our quarterly review with our portfolio construction team at BlackRock, and we asked them, as we do each quarter, to help us better understand risk and positioning in light of the themes we're following and the most recent data. This quarter, our actions center around the decrease we see in the expansion of our economy. We're exiting the momentum factor asset class and reallocating those funds in an asset class with higher quality companies and more stable earnings history. We're also making adjustments to continue to minimize the impact of volatility on portfolios. Finally, we're re-examining our fixed income or bond positions to assure they're aligned consistently with our economic outlook. Our goal is to participate as opportunities develop while continuing to keep risk in check and appropriate based on your individual risk tolerance and goals. Always remember, your personal planning is the cornerstone and most important factor that will help our clients make progress toward their goals. Please let us know what questions you may have and how we can help. And as always, thank you for taking the time to listen today.